You're watching Business Plus on News 9 Live, and I have some fresh news coming in on this edition of Business Plus in the form of consumer inflation data, or CPI inflation, consumer price inflation data that has come out, and much to the relief of all those tracking it, inflation for the month of August 2023 has come in below all expectations, and more importantly below that 7% mark. It has come in at just around 6.83% for the month of August, below the 7% mark. Great number there coming in, because almost all analyst estimates pegged it at 7% or above 7%, even some saying 7.10%. But in a happy surprise, it's coming at 6.83%. Karthik, fantastic number over there as far as the inflation is concerned.
Fantastic number, I think, primarily because we had a shocker last month,
yes.
Krishna. And look at the graph there. We had a 7.44% headline inflation on the back of double-digit food inflation. We are talking about headline inflation here. We are not talking about core inflation. And if you look at the graph overall for the whole year, the one-year graph starting September last year till August this year, you have seen that even 6.83 is on the higher side. So you had a 7.41% September 2022 inflation, 7.44% the highest. That was a real shocker that came last month, the month of July. And now we are at 6.83%. Definitely a relief given the shocker we had last month. Right. Otherwise, inflation still fairly high, much higher than RBI's estimate and RBI's own internal threshold, upper threshold of 6% or so.
Right.
So August CPI inflation 6.83%.
As you're rightly pointing out, that's the headline inflation number. And as far as the core inflation number goes, Karthik, even that number coming in at less than 5%, at 4.8%, if I'm not wrong.
4.8%, Krishna. This core inflation strips off the volatility in food prices and fuel prices. Correct. And that is how, and that is where the real effort of the RBI comes into play, because this is the liquidity control mechanism that RBI employs by way of sucking out liquidity, increasing rates. So that seems to be working. Last month, the core inflation came in at 4.9%, a 10 basis point reduction there. Nothing substantial to write home about, but at least the trajectory is fine. You're seeing a month-on-month decline in the core inflation number also coming, this time at 4.8% versus 4.9% sequentially last month. Right,
that's core inflation. That doesn't include food and fuel inflation you talk about, but food inflation too coming down from its highs over the last month. So it's good signs for inflation overall in terms of it retreating from the kind of shocking highs. Look at food inflation over there. For the month of July, it was 11.51%. Now that's down below the 10% mark at 9.94%. That's another relief again.
I mean, I'm not sure if I should call it single-digit inflation or not. It is almost just 6 basis points below being double-digit inflation. But I think sentimentally, it holds value that food inflation has eased from 11.51% to about 9.94%. That's a good 150 basis points. Definitely some relief there, but not as much if you look at vegetable inflation, or even if you look at pulses inflation. So these continue to be in double digit. In fact, vegetable inflation continues to be as high as 26.14%. This against a print of 37% last month. Definitely a good reduction in vegetable prices per se in and we've seen what's happened with tomato prices, onion prices over the last 2 months. So some relief there, but still 24% is a fairly high number even when you talk about vegetable inflation. Pulses inflation also continues to be in double digits, about 13.4% or so. So when it comes to food, food is continuing to be expensive, perhaps not as expensive as prices would not shoot up at the same clip as they did last month, but they continue to rise, and that's bad news.
Right, bad news as far as food inflation is concerned, but easing as far as the headline inflation and, for that matter, core inflation is concerned. So that's the headlines coming out of the consumer price inflation, or CPI inflation data. And even as that data came out, we also had the industrial output index data, the IIP data coming out. IIP growing at 5.7%. This is for the month of July 2023. Bear in mind, not for August 2023. 5.7%. Compare that to the previous month. It's a full 2% jump, Karthik.
Yes, so I think sequentially, when you look at it, Krishna, definitely there is a jump. Sequentially, we have seen, again, the month of June, the IIP coming down at about 3.8%. But if you look at the graph for early this calendar year, Jan and Feb, we've seen better numbers than 5.7%. In fact,
Right.
Jan and Feb this year, we saw 5.8%, and marginally lower than that. So I think a lot more is expected. But overall, a 2% jump in industrial output is good news for the economy. It pretty much suggests that the wheels which are in motion of industries firing on their cylinders is a continuing story. And the little blip that we saw in the month of June and previously in the month of March, when it had actually ebbed down to just about 1.5% or so, you've seen that those could, in the larger context, just be seen as aberrations and not really a systemic pattern there. Hopefully from here the numbers should continue to get better.
Hopefully the numbers continue to get better, but two surprises and relief for the markets when they open for a trade on Wednesday morning. Curious to know how the markets take these inflation numbers that have come in below the expectations and the industrial output numbers which have come in above expectations. So how markets will digest it, we'll know on Business Plus come Wednesday morning. So make sure you tune into that. But for now, it's a wrap here from our side. Thank you so much for watching. This is Krishna Kumar and Karthik Malhotra signing off. Keep it with News 9.